Okay, so I want to talk to you guys about how you can leverage the directional bias of the dollar index to trade the Japanese yen paired with the pound and the Japanese yen paired with the euro. Okay, so as I always do every week, I talk about where I expect the dollar index to reach for that particular week. Okay, so knowing this particular direction, okay, if you know the direction for the dollar index, okay, you can use the same knowledge to trade this the pound and yen, okay, and then also the euro and then the yen. Okay, all right, so I usually talk about the dollar index, and sometimes I talk about the euro USD and also the pound USD. These are my main pairs that I trade, and I sometimes trade these ones based on certain conditions. Okay, so I want to talk to you about how I leverage the direction of this particular pair, this particular index to trade this. Okay. So first of all, you know that anytime the dollar index rises, okay, anytime the dollar index rises, okay, we know that our pound USD and then the euro USD, they drop, okay, and then the reverse is also true. Okay, anytime the dollar index drops, okay, anytime the dollar index drops, GU and EU rise, okay, because they are inversely related, okay, because they are inversely related. That's the normal trend that we know, but sometimes, you know, they can be decoupled and other things might happen, but basically that's what happens most of the times. All right, so knowing the direction of the dollar index, how do we leverage that knowledge to trade the Japanese yen? Because the euro and then the yen and the pound and yen have no correlation, okay, they have no correlation with the dollar index, okay, or they have no direct correlation with the dollar index, which is a DXY. Okay, these two have no direct correlation with this. All right, so having the knowledge from this section, okay, from this area here, all right, you can say that anytime the dollar index is dropping, our euro, anytime the dollar index is dropping, our euro, okay, and then our pound are rising. Okay, that's one thing you should know if you want to trade these two pairs, the yen and then the euro yen and then the pound yen. If you want to trade them, we have to know this, or we have to have it in mind that anytime the dollar index drops, that's about 90% of the time when the dollar index is dropping or it's very, very weak, okay, we have our euro yen and then the pound yen also rising. Okay, that's what you have to know. That's the whole idea. Okay, because the other side, which is the dollar index rising, okay, the dollar index rising, which causes the euro USD and then the pound USD, okay, the pound USD to drop. Now, you can have some instances, okay, you can have some instances where anytime the euro USD and then the pound USD are dropping, okay, when they are dropping, you can also have your your EJ, okay, and GJ, EJ and GJ also dropping. There are instances like that, but getting this instance is probably maybe 50% or less. Okay, 50% or less. 50% or less. Okay, but you only have to use this knowledge. Okay, you only have to use this knowledge when the dollar is dropping steadily. Okay, when it is dropping really fast, okay, then you can have stronger euro and pound. Then you can focus on, you can have your 90% probability that our GG and then EJ are going to do what? They are going to rise. Yeah, so before you can also go ahead, just go into the market and then try to trade these two pairs. Okay, you have to also know that you have to also be aware of the market structure. Okay, market structure. Market structure. And also you have to be aware of you have to have a good market. You should be able to analyze the marketplace well. Okay, you should be able to analyze the markets really well to help you, to help you get the most out of this particular concept. Yeah, so I would so I'll take a look at just one or two examples, and then you just call it a day. But you can just go to your charts, the previous days trades. Okay, then you can find those kind of correlations. All right. Yeah. So okay. So I have here the dollar index. Okay. Let me see if I have pound is here. Yeah. Dollar index is here, and then the pound is also here. All right, so these are the two pairs. Let's take a look at just this previous week. Okay, how the market performed. So on my left hand side is the dollar index, and then on the right is the pound. That's the GG. Okay. All right. So if you take a look at today's trading, let me see. You see, over the week we've had some bullishness on the dollar index. Okay, and if you take a look at when the dollar index was dropping, okay, when it was dropping, we had our pound yen also rising. Okay, was rising. If you take a look at the pips from here, I had like about, okay, let me use the closing of this candle to the opening of this candle. Right there, we have 138 pips. Okay, we have 138 pips using the bodies of this particular this day's range. Okay, if we should start from here, we can have more than that. That's 160 pips. Okay, so out of this, get some pips out of it, and the dollar index did only about 47 pips. Okay, the dollar index moved only about 47 pips, and then our GJ made more than 100 pips. Let's take a look at the euro as well. Yes, so this today's trading 30 minute. This is today's trading, and today's trading on the euro we have 159 pips. Okay, if I should take the range from this high to the low we've had for the day, okay, we're getting almost 183 pips. Okay, 183 pips on the euro JPY. Okay, so and then we also take a look at the euro yen and then the pound yen, coupling that with our market analysis. Okay, our market analysis. From there, we can have some pips to harvest from that side as well, okay, which are quite huge. And we have to know that we have to use proper risk management because of the ranges. Okay, and make sure you use stop loss in trading of the euro yen and then the pound yen. Make sure you use stop loss because it can hurt you really bad. Yeah, so I can just go back in time and then also just do some back trace. And also you can also take a look at anytime the dollar index is ranging. Okay, anytime the dollar index is ranging, you can have the same thing working in the euro yen, or the same incidents happening in the euro yen. The euro yen would also be rising depending on where it is at the market, or what the market structure is telling you. It could be rising, which is we have about 80% of the time getting it right, or of the time for the euro yen and then the pound yen also to rise when the dollar index is ranging. Okay, but anytime the dollar index is rising, just forget about this trade. Just forget about it. It could be rising, the dollar index could be rising, and then the euro pound could also be rising. Okay, and that wouldn't help if you are not somebody who is experienced in the marketplace. That wouldn't help you. Okay, so you just focus on that one instance, and then even when the market is ranging, you can just forget about that because you need a little bit of experience or more experience to go into that. Okay, so I hope you go through your charts and then you can have some more examples for yourselves. Thank you very much.